Good morning, traders. It's Wednesday, October 22nd. Should be an interesting session here. The stock market is a little bit mixed. We have the S&P 500 slightly positive, the NASDAQ negative. Seems like the majority of money is flowing out of the Russell, which are the small cap stocks, simply because that's where most of the money has been flowing recently. Everybody's chasing big returns, and of course, when things turn around, they also run for the door just as quickly. So you get bigger percentage swings to the upside and the downside. But let's start off with precious metals because there's a lot going on. One of the members wanted to go back and touch on the 70s. So I pulled up two charts of gold. This is the weekly chart of gold. The top one is where we are right now today. The bottom one is back from 1980. They're both the same amount of more or less days. It's about 4 years here showing the price action. So in the 80s, you can see, or 70s, we worked our way up, kind of put in a bottom similar to what we have here. Eventually we had a hiccup, a pullback here, which looks like something similar to here or here. And then we went up. We had a fairly multi-month pause with some big volatility, which is what I feel as though we've kind of hit right here over this year. And then gold is run up and it's taken off. And of course, that's what happened in the 80s. It started to take off and run higher. And so we're in this unique kind of perfect storm where we're in a raging bull market for the precious metals space. And the big question is, where is the top? Now, if we were to just squish this chart down, you can see gold just kept on going and going. It just went absolutely ballistic, which is what everybody wants who's long metals. And I mean, this is what I would want as well. Since we're already parabolic, why not shoot for the moon and see how high it can go? This pullback along the way could very easily just be that we have this week. Again, it's really only just a couple days pullback in gold. It's not the end of the world. It could be recovered on this weekly bar, no problem. But we have potential big upside. But gold pretty much rallied 100% from this previous pause to the peak, which would be equivalent from here to there, which puts gold technically at about $6,500 if it was to do what it did in the 80s. Now, obviously, this time is different. It's always different. There's always different reasons for things, but there is no doubt we have central banks loading up on gold. There is something pretty big changing behind the scenes, which is why I think gold is doing so well and why I'm still holding physical metals. I do think this end is going to put in a top at some point, but we're in a bubble phase and we don't know where the top is. And so it's just going to be a wild ride to the top and see where all this plays out. So anyways, that's kind of it in a nutshell. Of course, when something like this does turn a corner, you can also get a pretty big pullback. Gold pretty much got cut in half within a few months after that peak. So anyways, that's kind of where we're at. We're in no man's land for gold. It is, the rocket ship. Is it going to recover? We'll just have to wait and see. But there's definitely the short-term money chasing the markets. Let's dive into the short-term charts. So if we take a look at gold here, gold has continued to sell off in overnight trading. It's down another 1.5%, and that is because yesterday has got a lot of people spooked, and there was enough fear in the precious metal space that it's going to carry over. People who aren't active traders in the market yesterday to bail out and get shaken out of their trades, they came home from work and they see this or they hear about it at work, and then they put their orders in and they are going to sell their stocks and everything this morning in the precious metal space. So it's going to drive the markets down. The market makers are going to have the markets open sharply lower to fill those orders. So gold is down. If we take a look at like GDX, this is the same with GDXJ. This is the same with silver miners. Let's just take a look at the 10-minute chart at the bottom. They are set to open around $70, so down below the 50-day. So it's going to be a big gap down this morning for miners, for all miners. If we take a look at silver miners as well, they're down fairly significantly as well. Set to open at 21.65. So, a big gap down. And of course, this is that carryover. This is an emotional move. This could be an exhaustion gap, meaning those who have been panicking out today feels like it's going to be a pretty big panic in gold miners. People are going to have their orders to just exit at the open. They're going to get a pretty bad fill because it's going to gap sharply lower, and that will flush down, spook the rest of the markets out, or whoever is going to sell who's scared is going to bail out today, and we could end up seeing the precious metal space put in a very big green candle. An exhaustion move means it gaps down and then it rallies back and potentially starts another big rally. So that could go to new all-time highs. So that's where we're kind of at and waiting to see. You can see the stock market for SILJ, closed at oversold territory, and that fear is carrying over to create that gap down. Now, if we take a look at where money is flowing today, to the positive side, we have the dollar up a little bit. We do have oil up. Now, let's just see what Bitcoin is doing. Ooh, Bitcoin's taking a bit of a beating today, down 3.5%, kind of unwinding this oversold bounce off the 150-day. Came right up, hit both the 20 and the 50-day, and which is also kind of a midpoint. If we just draw a line right across there, either Bitcoin was stuck above it or stuck below it, and it's a pivot point, right? So it naturally came back up to that area, and it's been rejected, and it's heading back down. And we'll just see how this unfolds. But again, Bitcoin does not look very healthy at this point. And if the stock market rolls over, I think we're going to see this back down into the 90s, below 100K. And if the stock market does firm up, maybe we're going to start to see it move higher. But again, it is a pretty ugly chart and in no man's land as well. You just don't really want to touch it. It's a coin toss. Overall, if we look at the equities market, we have mixed signals. The market is flipping and flopping between a oversold market condition, neutral, downtrend, back up to a short-term uptrend. It's trying to figure out what it's doing, and we don't really have any clear signal. We don't have panic selling yesterday in the stock market. We don't have any FOMO. Now, there was panic selling for sure in the precious metal space, but we can't quite gauge that other than just looking at the charts of precious metals and miners and the volume in terms of people selling shares, which, when you look at any of the mining ETFs here, there's pretty big spikes in volume to the downside. So that's telling us it's panic selling, people running for the door. Anyways, that's it for this morning. We'll see how the day unfolds, and we'll go from there. Take care. Bye-bye.